What is up guys, Taiki here, and today I wanted to make a state of DeFi report video because I know I haven't made any videos recently, but I've been moving. I have had some minor health problems, but now I feel better, and just because I haven't made any videos doesn't mean that I'm not doing any research, right? I'm basically dedicating my entire life to this space, as of now. So there's a lot of knowledge I want to cover. However, some of the stuff I do, it's not really worth making individual videos because it's kind of a waste of my time, and what's the point? So I was like, you know what? I have a lot of content that I've been making, so I might as well compile it all into one long ass video. And if you don't like it, you can click out. But I'll go through I'll go through the trouble of adding timestamps, so you can skip through whatever section you want. But basically, the purpose of this video, and hopefully in the future videos, is just long videos where you can kind of get a grasp of what's been happening in the space. Because I know price is bad. It might seem on the surface that nothing is happening, but if you look under the hood, there's a lot of things happening. And hopefully through the video, you can learn and keep up with the space. And hopefully, through my channel, even though price is down bad and, it's hard to keep interest, maybe this is a good way for you to engage with the space, just so you can remain interested, even if that means you don't buy anything, right? Yeah, so this is going to be the end of the video. I have a lot of things to cover, so yeah, like I said, timestamps below. None of this is financial advice, of course. I have no idea what I'm doing. I do want to make some token disclosures. These are tokens I hold more than 1% in my portfolio. I own other stuff, obviously, because I farm and whatnot, but all these tokens I've talked about on my channel, so I don't think it's a surprise. But just for transparency reasons, I own Bitcoin, ETH, GMX, FXS, XMON, Gains Network, and CVX. So let's do a bit of a macro crypto update. And this isn't macro in terms of interest rates and whatnot, but just the macro crypto environment, right? Just give a brief update on that. So this is the top 8 ecosystems in terms of TVL, and I've been pretty adamant for the past couple of months that I think alt L1s are going to suffer, and I think mainnet and L2s, their TVL dominance relative to the entire DeFi space is only going to appreciate, or just gain ranking. And you see that number 8 has Solana. Solana used to be in the top 5 for a very long time, but recently there's been the Mango markets exploit. It's not really an exploit. It kind of depends on how you look at it, but basically they enabled Mango token as collateral, right, which is this illiquid token, and someone just bought a bunch and borrowed a bunch of assets against it. Because it's a money market, and because the Mango token crashed in price afterwards, there's a lot of bad debt in the ecosystem. I'm not going to spend too much time on that, but basically it's a new ecosystem. There's going to be growing pains, and with the whole bridge hacks and whatnot, right? Recently BSC had the BNB exploit with the bridge hack. I just expect more TVL to flow back into mainnet and also L2s, and that's what you see here. I've been saying I think Arbitrum should be top 5 by end of year, assuming that Odyssey is going to launch, Arbitrum Odyssey. But I'm not really sure what the timing is. But you can see that the 1 month change, Solana down, Polygon down, Avalanche down, BSC. I don't know. BSC and Tron, it's kind of weird because there's a bunch of rich people that can kind of obfuscate the real data. But I would expect that the majority of retail activity is happening on mainnet, L2s, Polygon, Avalanche, right, and Solana, I guess, and BSC too. BSC too. And I talked about the risks of using bridges and alt L1s a couple months ago on this channel. So if you want to learn more about bridge risks, I'm not going to spend too much time on it because I don't want to waste your time. If you want to educate yourself, watch this video. So yeah, I expect ETH and L2 TVL dominance to go up, and I also expect DeFi to outperform in terms of TVL, as in this bear market, as people go more and more risk off. I think people will be less, or the risk appetite to deploy capital on newer protocols are going to be lower. So I expect crvUSD, Aave, right, those protocols to gain in TVL dominance. And if you're launching, if a new project launches, it's just really, really hard to get people to want to deploy capital in size, unless there's VC backing, docs teams and whatnot. But even then, right, what's the point at this? Because those projects generally get dumped to the ground in terms of price. And I'll expand more on the DeFi outperformance, and we've already kind of seen that recently. But I'll share some charts to in case you're a visual learner. 2020 and 2021, I guess like my channel blew up because I identified the L1 trade, like earlier than other people. But that's because, ETH mainnet gas fees were very high and there was a lot of demand for block space, and all that demand for block space had to go somewhere, right? And it went to L1s. But when no one really cares about crypto anymore, right? DeFi, NFTs, nothing, there's less demand for block space. And when that's the case, there's less demand to use alt L1s just because mainnet L1, right? ETH is pretty cheap now. It's not that cheap in the grand scheme of things, but it's cheaper. And L2s, they didn't really exist in 2021. They did, but the ecosystem was kind of trash. But now, a lot of the developers are building on Arbitrum, Optimism, and mainnet. So I just expect more and more developer mindshare to flow into these ecosystems. And if that's where the devs are going, then that's where money is going to flow too. And when it comes to alt L1s, we still don't know what's going to happen to those 3AC tokens, right? Has it been already sold? Is it still liquid, right? Is it locked? Because I know they raised a bunch of, they bought a bunch of these L1 tokens, and from my understanding, they were locked for at least a year. So I'm not really sure what the hell is happening there. Maybe they sold OTC at a discount, but who knows, right? There's a lot of uncertainty there. And with these alt L1s, the inflation rate is still pretty high. The proof of stake, right? You can get paid 8% staking Avalanche, Sol, and whatnot. And most of those validator rewards are going to VCs, teams, and they're going to be selling tokens. I know for a fact that I'm not going to mention names, but these alt L1 foundations, they're trying to raise more money, right, by selling their alt L1 tokens to raise more cash. And it's not a bad thing, right? Because these teams need funding. But if you're looking at it from just putting a bunch of money, there's headwinds, right? There's a bunch of a supply overhang for these alt L1 tokens. So I'll share a bunch. I've been publicly bearish AVAX for a very long time. So I'll share here. But this is an AVAX chart. Maybe this isn't the best chart because this doesn't have that much price history, and but AVAX ETH, right? This is Avalanche relative to ETH. It's going down. Solana relative to ETH also going down. I just expect this trend to continue. Can I have pumps in the short term? Of course. Am I bearish these projects longer term? I don't really have a strong opinion, but I'm just saying in the short term, just a bunch of headwinds there. The thing with DeFi tokens is that these governance tokens, obviously in a bull market, there's not that much value accrual, the narrative is weak, and they didn't really do that well. However, like I mentioned earlier, the benefit that these projects have is that they move slow, and that's a good thing, right? Because in a bear market, I don't mind putting a bunch of money on Aave Curve because I trust these protocols, right? Uniswap included. So, and if you also think about the token distribution of these tokens, a lot of these projects, they've had tokens emitting since 2017, 2018, 2019. So the distribution is a lot more fair. Fair is it's a subjective term, but I think it's more fair than some of these alt L1 tokens. And I feel like in a bear market, I think money will flow back into these tokens because things like Aave, right? It's Aave is the de facto #1 bank in crypto, right? That has to have value, even though in the short term it's just a pure governance token. Same for Uniswap. At some point, Uniswap just has to be a good buy because they are the leaders in the AMM, the DEX space, and they have the strongest team in crypto, in my opinion, right? At least in the exchange space. Or just tokens with more transparency. So I'll share some ETH relative charts. So this is the price of Aave divided by the price of Ether, right? It used to be down only in 2021. That was brutal, but now it looks like it's basing out, right? If you compare this to AVAX ETH, Solana ETH, I think this looks more constructive because it looks like it's basing out, right? This is Uniswap relative to ETH, right? And all these tokens in 2021 was pure trash, right? It was literally trash. But now you see that in 2022, after the May crash, these tokens are gaining relative to ETH, or at least maintaining value. And I think this is constructive because when the markets do go risk on at some point, right? Because at some point, right, the markets will go risk on. I think these tokens might just outperform, and that's a good thing. This is Sushi relative to Ether. I know they hired a new CEO. They raised some money from Golden Tree, right? Avi Feldman, I really respect him. I have problems with Sushi. I don't think their tokenomics model is that great. And they suffered a lot from a lack of structure. So maybe the new CEO can turn the ship around. But it's something good to see here. This is Chainlink relative to Ether, right? Also, down only, but maybe it's spacing out. Chainlink, right? I feel like Chainlink is a bet on blockchains in general, just blockchains existing. Yes, there's a lack of token value accrual, but they recently introduced staking, and hopefully over time, the Chainlink token can actually have some level of correlation with the amount of value that it secures via their Oracle network. This is convex, right? I mean, like some of these charts, it's kind of hard to like really gauge because some of them are new one now, but CVX, like most of the tokens are already emitted. You can argue that it's a farm token, but I feel like CVX is a bet on Curve. Obviously, I token disclose, like I own some. I bought the dip, but I just have it locked, and hopefully I'm right on the thesis that Curve is here to stay. Stablecoins are here to stay, and I view convex as a bet on I guess stablecoins growing and the demand for stablecoins growing. This is GMX relative to Ether. We saw a spike in early October because they were listed on like 5 different exchanges, like all in the span of a couple of days. That was all the news. But and maybe if you do just regular TA, this looks pretty bearish. But the trend is your friend, and this thing has been putting in higher highs and higher lows since basically like Q2 of 2022. And I don't expect this trend to break. Maybe it goes sideways, maybe it just chops, but it's one of the few protocols actually making money. Great protocol. I mean, obviously, I made a video on this like 3-4 months ago, so feel free to check that out if you're interested. And also XMON Ether, right? Relative to Ether, it's about to, I guess there's like resistance at the 25, XMON divided by Ether ratio, but it's looking pretty good, right? So all these DeFi tokens with more fairer distribution, right? I think these tokens will outperform relative to the Alto ones, and everything that I've been buying, right, has been DeFi tokens, right? It's not L1 tokens aside from Ether, just like DeFi tokens, and that's my specialty, right? I feel like that's where my edge is. So I'm gonna focus my channel on DeFi. So hopefully, if you're sticking around and watching this video, hopefully we'll get through this together, right? So app tokens likely outperform L1 tokens. Hopefully this is like this is like what you want to see, right? And I know there's like regulation fears and whatnot, but those are valid. But I can argue that regulation is actually bullish for DeFi because things like Uniswap and Aave, they don't have value accrual because these teams are afraid of these tokens being securities and the lack of regulatory direction. So if there is regulatory certainty for any of these tokens, right, like what kind of token models are legal, right, and maybe at that point there can actually be real value accrual for things like Uniswap, because one day if Uniswap staking is enabled where you can earn a % share in like protocol fees, like that's going to be an amazing token, right? Not yet, and maybe you can price, and maybe people are accumulating, anticipating that, right, with like a 12 to 24 month time horizon, and obviously just use this video as a tool for you to view the entire space holistically, and you can make your own decisions, but I feel like the bid is returning to not Alto ones, but these DeFi tokens, and that's a trend that I think is worth monitoring. Another trend I think is worth monitoring is under-collateralized lending. I have a hard time saying this for some reason, so I'll just say UL from now, right? So when I say UL, it stands for under-collateralized lending. I know UL has a bad rep just because that's how kind of 3AC went down. They basically borrowed from a bunch of different institutions using the same assets as collateral, and the lack of transparency with these other lenders just made it so that when 3AC defaulted, when 3AC lost a bunch of money, they defaulted on their debt. And you can argue that, yes, under-collateralized UL is risky, right? Because it's under-collateralized. However, maybe on a blockchain, it makes more sense for UL to be a thing on blockchains, because even when Celsius and 3AC were going under, if you were on Twitter, there were people sharing these make or DAO positions where people were saying, oh, like Celsius, this is BTC Vault, they're going to get liquidated if Bitcoin goes below 17K, right? And people were monitoring it, and people were like, oh my God, it has to go to that price. And then over time, we saw Celsius pay down their debt, right? Like, just bridging Dai across like their applications or whatever. And, they were able to pay down their debt. So, part of the reason UL was just sounds risky and has a bad rep is because of the lack of transparency. But if everything is happening on a public ledger, then maybe UL can actually be a good source for institutions to borrow and for lenders to earn a decent yield on stablecoins, Ether, and other altcoins. And this, so if you go to DeFi Llama, this is all the under-collateralized lending protocols. We see Maple, TrueFi, etc. You can see that it's pretty capital efficient, right? I mean, for example, Maple, there's almost $330 million supplied and $325 million is borrowed, right? I mean, I love Aave, right? And, it's great, right? Being able to be your own bank, I think that's great, but it's capital inefficient. And I think the trend towards DeFi is like trending towards better capital efficiency. And I feel like, if you think about the percent share of UL as UL as percent share of total lending should only grow over time. Right now, I'm sure it's single digits, but I feel like over time, as there's more trust, as these protocols get more battle tested, more and more TVL will flow into this because over time it builds lending, there's trust, and when there's trust, maybe more people deposit, and then as lenders, and then more institutions borrow against the collateral, and you can actually earn decent yield in your stablecoins. So, for example, RBN Finance, you can earn 11 to 13% just depositing stablecoins, and you're essentially lending out your assets to market makers like Wintermute. Wintermute is generally delta neutral, so and you can obviously audit, maybe not audit, but you can actually check their wallet to see how much stablecoins that they hold. So if they look kind of risky, you can pull out whenever. And on the left hand side here, you can earn 7% on staples and 5% in Ribbon rewards. And I'll talk about Ribbon a little bit later in the video as one of the few protocols that I think is interesting. And maybe I'll get into it here, right? But if AMMs are trending towards better capital efficiency, right, from UniV2 to UniV3, it's natural for money markets and just other markets in general, like NFTs, money markets, options, just anything to just trend towards more capital efficiency because in order for products to find product market fit, to gain competitive advantages, things just have to be capital efficient, right? Because blockchain, DeFi, not really capital efficient, but that's definitely where the trend is going. And Maple, I talked about these protocols, right? And all these under collateralized lending protocols, they use this thing called Credora as this on-chain credit score type of thing. So I guess there's central risk here, right? Because if Credora gets things wrong, then people aren't really pricing risk efficiently. But I'm not really a fan of Maple token or TrueFi token or Clearpool token just because I made a video in the past, right? And why I'm generally bearish money market tokens. Aside from Aave, right? I'm a bit bearish Aave forks and just general money market tokens because they don't really make that much money. Sure, they can lock up a bunch of TVL, but it doesn't really mean there's value accrual because first of all, they're governance tokens, and also how much money they make, they capture the spread between the lending rate and the borrow rate, right? So if there's $1 billion locked, the lending rate is 1% and the borrow rate is 3%, then they capture that 2% basically. Just to simplify things, and 2% on $1 billion, that's $20 million, which is okay, right? But it's not that much in the grand scheme of things. Of course, if the space grows more, then there's going to be a lot of value accrual for things like Aave. But not a huge fan of these tokens. But this has $300 million. Clearpool has $150 million, and Ribbon Lend has roughly $20 million. And let's talk more about Ribbon. I think it's an interesting protocol. I don't own any, but maybe I should. So Ribbon is this DeFi options vault product where they essentially allow people to deposit capital into Ribbon, and then they'll run various option strategies for you in order for you to generate yield. And they also introduced Ribbon Lend because they work with market makers, and they're also introducing this product. However, what's more interesting is that there's working on this new options central limit order book DEX called Aevo that's going to be built as a rollup on Ethereum, right, as a layer 2. And I think this is interesting because I think GMX and Gains Network show that there's definitely demand to trade, crypto coins on leverage, right? Of course. However, there's not that much product market fit when it comes to the option space. And I'll talk about more options protocols, so Ribbon and Premia I'll talk about later. Just because it's really difficult to make these things on chain. It's my opinion that I think an options AMM makes sense, but Ribbon. This team thinks otherwise. They think a central limit order book makes sense, and I think at the end of the day, I think both models will end up working, and both the types of product protocol designs will have their pros and cons. But let's spend more time on Aevo because I actually think it has potential to be the most liquid exchange for people to trade options on chain, and I think that's very, really valuable. So this account, Mr. 0x Boccaccio, listened to this AMA, took some notes. So credits to this person, and I'll be going over various screenshots from this these notes to just provide some commentary. So Aevo is going to be, like I said, this roll up on L2. It's going to offer 100 plus markets, right? Not just like 100 different coins, but on-chain DeFi, there's only like weekly calls, right? As in, if you wanted to buy options on-chain, you can only buy weekly calls or puts. But Aevo is trying to, have more options like daily options, weekly options, monthly options, yearly options, right? All these different markets. And, I think there's demand for people to buy options, but there's a problem on the supply side, right? Because it's really difficult to create options on chain. So what they're planning to do is to just onboard market makers. So it's not really decentralized; it's more centralized because they're relying on large market makers to essentially sell options to retail institutions. But I guess the difference here is that it's on chain, right? So you don't have to KYC. I could be wrong on that. Maybe it's going to be a KYC L2. But basically, it's not. There's just onboarding market makers to market make options basically, and I think if you fix the supply side, the demand side will follow, right? That's what we saw with Uniswap V2, where people were like, back in like a couple of years ago, people were saying like, why would anyone want to buy coins on chain, right? Like when Coinbase exists, when Binance exists, that's what people were saying. But Uniswap V2 allowed anyone to pair whatever token with another token, and be like anyone can be their own market maker. And this found product market fit amongst like the right tail, like the long tail assets, right? Because Coinbase, Binance, they're not going to list some like $5 million market cap token. Maybe Coinbase would, right? Because their listing process is like so bad. But just generally, they're not going to list long tail assets. But on Uniswap, you can trade anything, right? As long as someone's there to provide liquidity. So I think that's a good analog to what's going to happen with the options, where there just has to be someone that just offers the supply side, right? Just someone to take on that risk. And if someone does that, and there's a liquid market to trade options, just billions will follow, right? Maybe not billions, but like billions will be traded. And I guess like how Ribbon benefits from Aevo is, Ribbon already has their structured products where you can deposit, let's say USDC, and they advertise like a 20 to 30% yield on stablecoins by having like a covered call option or like whatever it is. However, like the problem with Ribbon is that some of these strategies, it's not like a safe 20 to 30% rate, because they're buying options, and if some of these option strategies don't work, then you can lose money. I think one of the put selling strategies for USDC that they have on their channel, they like advertise like a 30% APY, but in reality, anyone that deposited into that vault lost like 30% of their capital, because the market keeps going down, right? And if you're selling puts, you get wrecked if the market keeps going down, right? So, but basically, if Aevo has a liquid options market, then that's going to allow Ribbon to make more products on top of Aevo. So it's kind of like this mutual ecosystem, right? And they're made by the same team, so. And they have a bunch of funding. They actually got funded by Paradigm, and Paradigm helped design Uniswap for V3, so maybe they know what they're doing. The Aevo team, they think that Orderbooks makes more sense than AMMs. Of course, like they're building an Orderbook, so they're going to say this. I'll make an argument on why I think AMMs could make more sense. I know it's really difficult to design AMMs for options because, for things like NFTs and coins, it's easy to just, make an AMM, because all you have to do is, if people buy, price goes up. If people sell, price goes down. But with options, I know there's like the Greeks, right? The gamma, the data, all that. And how do you incorporate that into an AMM? I have no idea. But I think anyone that is able to do that is going to easily have their product be a multi-billion-dollar protocol. I'll skip this. And related to the Ribbon token, this AMA mentioned that there's no direct value accrual. So I was hoping that maybe Ribbon can be like a staking token for L2s, but they said that doesn't make any sense. They said for like the first 6 to 12 months, I think. First to 6 to 12 months, they're not really gonna have like direct value accrual. They're gonna just like operate it like monitor performance and whatnot. But if you have a longer term time horizon, maybe like just add it to your watch list and say that, hey, like maybe in 2024, right, Aevo is going to be a top 3 options DEX, and Ribbon might have some value accrual. So it's something to keep in mind. And also with the trend towards under-collateralized lending, right, Ribbon also gives you exposure to that in a sense. So no, I think Ribbon is a decent token. I don't own any, of course. Aevo is going to launch in Q4, right? So they're not just announcing this and saying, it's launching soon. I guess they are saying that, but they're going to launch this in Q4. Well funded, might drive more TV on the Ribbon Finance. So that could be some value accrual. So Ribbon takes a 10% performance fee and 2% management fee. 50% of the protocol revenue gets sent to the treasury, and 50%, the other 50% gets converted into ETH and is distributed to VE Ribbon holders, right? So the Ribbon lockers, right? TVL, not great. It's like nothing is that great, right? And this is like the amount, there's the various APRs you can earn by locking Ribbon. Maybe this is interesting, but just sharing it with you. Maybe it's weird that they're launching Aevo. They've announced Aevo right when the team and investor tokens are starting to unlock. But it's hard to I guess avoid like token unlocks, right? It's just a part of cryptos. They're all inflation, right? Even Ether is inflationary right now. Even Bitcoin's inflationary. But it's all about the fundamentals. If the fundamentals are strong enough, it should be able to overcome like these token vesting schedules, right? And hopefully the team and investors are bullish enough where they're not going to sell like right now. Apparently the Ribbon seed price was 30 million FDV, so use that to your knowledge. I don't know how many tokens were sold there. I also know that they raised a Series A and Series B. I don't know what valuation they raised there, but I know this information, so I just want to share with you. So obviously, options central limit order book makes sense, right? You just onboard market makers and they'll like sell it to you and whatnot. But I think with DeFi, I feel like if you wanted to decentralize ethos, it should allow anyone to be like a market maker, right? That's kind of the point. That's kind of what GMX did well, right? You can buy GLP and you can become a market maker essentially, and you collect trader fees. And that's a great model, and GMX outperforming. And similarly, I feel like options, right? Maybe I feel like anyone that can create like this, because like GLP, right? It's like a basket of assets. If anyone could create like a basket of like assets, maybe call it like options liquidity providing like token, whatever, right? OLP. If I can like buy a basket of like the majors, and the protocol itself will automatically, charge do all the pricing for me. I feel like that protocol is going to be just amazing. It doesn't exist yet, of course, right? And I'm just like, sharing you like what my thesis is for like option AMMs. And generally, like it's really difficult to price things on chain. So for example, DopeX, the option protocol, how they, I guess, sell options is you have to have individuals like write like options themselves, right? And that's not really a scalable model, because how do you expect me to like write options, right, and price them correctly? It makes no sense. So I think AMMs are just like the best way to price things on chain. But obviously, builders have to figure out how to price things correctly. Obviously options are more nuanced, so maybe it's not possible, right? Maybe I'm just incorrect and like Aevo takes all the market share. But I'm looking to see who can figure it out. And I'll share Premia, low market cap token. I don't own any. I'll share why. But this is a pretty promising token project, in my opinion. I guess a little backstory. I think they launched a token in 2021, early 2021. And I was part of, so back then I was like playing poker professionally, and I was in this poker Discord, and everyone was like hyping it up, right? It's like all my poker friends were like, oh yeah, like Premia to the moon, right? It's like, and they're like aping into this token, and I was like what the hell is going on, right? And then it's just like nuked. It's just like nuked to like whatever like ridiculous price, and now it's like going sideways. But the thing is, they've been around since early 2021, and if you listen to the founder interviews, the team looks, the team sounds competent, right? They're Anon. Obviously, like, what the hell do I know? All I know about their team is their voice, right? And like their relatively inactive Discord channel. But they dropped this Premia V3 white paper, and they've been teasing that this is going to drop Q4. Now they're saying it might be in Q1, as I have no idea. But basically, TLDR, they're trying to build an options AMM. and implementing concentrated liquidity. Also, another thesis is that I think all AMMs are trending towards concentrated liquidity. We saw with Uniswap v2 and trending toward when Uniswap v3 launched, right? I mean, they introduced concentrated liquidity, and every other DEX in other blockchains, they're creating concentrated liquidity. So we see Refinance on Near, Trader Joe on Avalanche, Sudoswap even introducing trading, right? Everyone has to be concentrated liquidity. So maybe, I mean, also for NFTs, I think it makes sense, right? I think NFTs should be priced or traded on in the AMM level. But no, I mean both models, right? AMM and central limit order book, and I think it makes sense for options too. I'm not going to spend too much time on this. You can subscribe to their YouTube channel. They have a bunch of videos, but they're going to have an options AMM. They're going to be vaults, native vaults, products built on top of it, whatever. They're running in-depth simulations with their bit data for the past 2 years to make sure everything works correctly. So, I mean, I have no idea if the product is going to work, right? I have no idea. However, on paper, it hits all the checkboxes for protocol design that I think it makes sense for an options AMM. So I think it's worth monitoring. That's kind of the point I've been making. The market cap is 10 mil, treasury value is 15 million, and the treasury isn't just like Premia tokens, it's mostly in Ether, USDC, so they do have runway. I have no idea how they're spending this money, but they have money. The one problem that I have with Premia is that I believe the circulating supply is 10 million, and there's one whale account with 800,000 Premia tokens. They used to have 1 million. And they've been like market selling Premia into the thin liquidity for the past couple of weeks. And I mean, I have no idea who this person is, what their intentions are. But I mean, they've been selling and they seem to be pretty price insensitive about it. The thing is, this is not like a team token, because if you track this wallet and the history, they've been buying Premia off the market since like April and like May and June. So I mean, this person has to be bullish Premia, but they've been selling for whatever reason. So there's a bunch of supply overhang from this account, because who wants to buy a bunch when 8% of the supply is held by one wallet that's been dumping, right? Maybe they've stopped dumping, but who knows, right? I mean, I feel like this is something to monitor. It's troubling. Timeline keeps getting delayed, but just add it to the watch list, I guess. And this, if you want to, I guess, hear whether the team is competent or not, just listen to this one. DeFi Fix, good channel. I mean, maybe I think they only have 2 videos, maybe not a good channel yet. But this video interview was really good. Right, it has 300 views, but I think it should have more. Froggy sounds like a good dev. Keyword sounds like a good dev. So now let's pivot. Talk about non-ETH plays, I guess. Atom 2.0. I know this was hyped up in this interview on Blockworks. Zaki Manian and Jack Zamplin were just really hyping up Atom 2.0. And this was before the conference. This was before the white paper dropped. And Zaki is one of the most well-respected devs in the space. And really, truly, right? I'm pretty sure he's like a top 10 dev in the space in terms of his capabilities and his credibility. And in this video, he mentioned that Atom 2.0 is going to make EIP 1559 look like a joke. So when I heard this, I was like, hey, oh, deflation, burn, what is it going to be, right? And it was pretty hyped up, and Atom just pumped into the conference. But when the conference dropped, it kind of was a letdown. And I mean, it's obviously a better model. The new tokenomic model is better than the old one, because the old one just sucks. But let me just go over what it's actually going to be, and then give my thoughts on it. So 3 big changes. They're going to have the interchain scheduler, allocator, and there's going to be an emission change. So the scheduler says that IBC is a network of different blockchains. It connects these blockchains, and when there's all these blockchains, there's going to be MEV. I'm not going to spend too much time on it, but essentially what they're saying is that Atom is going to be able to collect revenues from interchain economic activity by creating a block space market and charging a matching fee. So part of this can go towards direct value accrual for the Atom token. And the allocator basically says that Atom is a basket. Atom just connects to all these blockchains, right? It's the Cosmos hub, and historically, it's been better to just invest in Atom ecosystem tokens. Maybe not now, but in the past. And they're trying to make Atom the reserve currency of the Cosmos ecosystem, and use Atom as a funding tool to fund new projects, and also use Atom in order to accumulate these ecosystem tokens. So Atom can be backed by itself and also the tokens within the Cosmos hub. and it kind of looks like this. But the problem is that the Atom token, the community treasury for Atom is like very tiny. I think there's only like 8 figures, like low 8 figures in the community treasury, because it's like less VC backed, I guess. So to mitigate that, they're proposing to increase the amount of emissions for Atom in the short term. So most of these emissions are going to go to the treasury, which will be used for the interchain allocator. So the dotted line is the old issuance model, right? It's like a flat line. And now they're proposing a new issuance model where lots of inflation in the short term, but decaying emissions. So maybe in the short term, these are headwinds for the Atom token. But I think, I don't have the exact numbers, but most of these emissions are going to the treasury. So it's not really like entering circulating supply. But no, just know that this is happening. And yeah, so higher inflation rate short term, less longer term. So, I mentioned with my videos, a video a couple weeks ago that, I expected the merge to be sell the news because from my experience, 90% of crypto events are just sell the news. I don't know what it is about crypto people, but they just like hype things up beforehand. And when it actually happens, there's like no buyers afterwards, right? They just like buy in anticipation. So I don't think it meets these expectations. So I think that's why it's been underperforming. And Zaki has been hyping up the interchain scheduler as a way to monetize. But if you look at the scheduler here, right, from the white paper, the revenue share, it doesn't even go to like the stakers, right, the delegators and the validators. It goes to the treasury. So you kind of have to bet that the treasury is going to allocate Atom tokens to like public goods and growth. But there's a lot of uncertainty there. Like I said, much better than Atom 1.0 because that was like bad, but not really sure in the short term whether it's going to be good or not. However, I am pretty bullish Atom. I don't own any, but it's definitely something I do want to pick up sometime in this bear market. Right now, I'm focusing my accumulation on Ethereum DeFi plays. Because I think, for the reasons I mentioned at the beginning of the video, that's where the opportunity is. But I definitely want to look into Atom as something to accumulate. They also introduced USDC, right? The USDC chain. And I heard that this is going to create more MEV. So maybe you can stake Atom, earn more USDC. I don't really know the details. But, if Circle has their own chain and, Circle is, distributing USDC to all these different chains, maybe that's going to create some MEV and that's going to create more, just demand for this, I guess, I don't know, like the matching fee that they've been talking about. So enough about Atom, right? Great ecosystem, love their community. They spend less time on marketing, more time building, which I'm a fan of. But let's talk about the other things that the coins I hold, I guess. So like I said, I hold these tokens, so I'm biased, I guess, but I hold these tokens for a reason, right? Because I'm excited. I'm holding them for the longer term, and everything that I've talked about, all the projects that I talked about on my channel, I haven't sold any, right? I have a longer term time horizon on this one, and generally, when if I think about my channel and where I want to be, I'm definitely in this space for the longer term, and I feel like this crypto influencers has a bad rap, right? Because typically these people show tokens and then they dump it, right? Or they, get paid to, talk about tokens. Most of you know that I don't run ads on this channel. I don't accept promotions. So, and, I don't do seed investing because I feel like, that gives me like an unfair advantage. So everything I buy is in the open market, right? So, and everything I bought, I haven't sold any. And, I don't think I'll sell these tokens. Yeah, like I'm not gonna sell these tokens basically. And if I do sell, I'll probably foreshadow it ahead of time just so people are aware. And I'm trying to be more transparent, I guess. But let's get going. So let's talk about GMX and Gains Network. I've already made this. Yeah, I made this video in June. So if you care about GMX, watch it, right? It's been one of the outperformers, right? It hit its all-time high, which is really, really rare to see in a bear market. But for good reason, right? They're making a bunch of money and their TVL is up only. And generally, TVL isn't like a great indicator for token value accrual, for like, generally, but I think for trading platforms, I think it is a good indicator because this means that there is more people putting money to be a market maker, right? Buying GLP, and if GLP is more liquid, then it's gonna allow for people to trade more in size, and earn more fees. The problem with like various farming tokens is that if TVL doubles from 1 million to 2 million, then the farming rewards gets cut in half, right? Because they're just emitting tokens, and it doesn't really matter like how many revenue this protocol is making. But with GMX, more fees means more like revenue for GLP holders, stakers, and GMX stakers. So I think this is good to see. And even though the trading volume has been kind of flat to down recently, it was able to put in all-time highs in volume, I believe in early September-ish, and like also parts of summer. So people are using the platform, and there's always demand for degens to trade on leverage on chain. So this is good to see. So I'm not going to spend too much time on GMX because I've been talking about GMX for like so many months, right? I mean, if you're following this channel and you don't know about GMX, then like what are you doing? But let's spend more time on Gains Network. I've gotten a lot of requests to cover Gains on this channel. I wasn't a huge fan because I wasn't like the biggest fan of how they designed their protocol with the whole Oracle system. And they've had problems in May because they listed Luna as a trading pair, and when Luna went to zero, it allowed a bunch of people to short Luna and extract a bunch of value from the Dai Vault, and that happened. But ever since that happened, it didn't stop the team from shipping. As you can see, the purple line, right, the Dai Vault. So the Dai Vault is similar to GLP, where you stake Dai and you become the house, right? You get to trade against. I mean, you don't trade against it, but traders get to use your funds to trade it, essentially, right? You become the house. And as you can see, this is Gains, and this is a link if you care, right? But trading volume for Gains hit its all-time high a couple of days ago, which is really interesting, right? I mean, we saw all-time high in volume in March, and then it kind of went to zero, and then we see this orange line playing higher highs and higher lows, and we hit I think it was like almost $400 million in trading volume in a single day. And if you go to the right-hand side, the purple line, right, the number of daily users, it's putting in higher highs and higher lows, and hey, this is good to see, right? if you're investing in a protocol, so it's really similar to GMX. You can beat a house by staking Dai, right? It's not GLP, right? They just have the single Dai Vault. And how it works is traders are trading synthetic assets. So as long as an asset has a chain-link oracle, anyone can trade it. So you're not really trading physical Bitcoin, physical Ether. You're just literally trading numbers on the screen. And fees go towards the Dai Vault, essentially. So they have these APIs, they take the median chain-link price oracle, and that's what people trade. And yeah, obviously if you're staking Dai, you're taking on the risk in case, because if traders win a bunch of money, then your Dai Vault gets drained. And that's what happened in May. I made these slides some time ago, so I think the Gains price is like almost $3 at this point, depending on when you're watching it. But not focusing on the price, just focusing more on the Dai Vault, right? You can stake Dai, earn 12% paid in Dai, and you get paid to trade all the fees generated by the platforms, right? So it's real yield, right? Stake Dai to be the house, yeah. But the problem is 10% APY for Dai Vault. Is that enough to incentivize people to deposit and open themselves up to be the house? I'm not really sure. At least with GMX and GLP, I can buy GLP, and I view it as adding risk to the market, adding I guess market exposure to the markets, right? Because I am a fan of just buying and holding, buying and hold GLP, or I can short Avalanche, right, by borrowing Avalanche from Aave and then buying GLP with the borrowed AVAX, because if I expect Avalanche to underperform, right, I can buy other tokens and then short AVAX, and I get to farm more GMX, right? So GLP offers more optionality because of the various assets in the basket. With Dai, there's less optionality. I mean, I'm sure that in the future people are going to make leveraged G Dai vaults, right? Where you stake Dai, you borrow a stablecoin, you deposit more Dai, and maybe you can boost your rewards. But I'm not really sure how healthy that is. If you're in the Telegram, Seb, who is the main dev, mentioned that they're going to have Bitcoin and Ether vaults. So maybe you can stake Bitcoin or Ether and earn 10% or whatever. Maybe that's going to be worth the risk. But I'm not really sure when they're going to launch. And they also updated the tokenomics. So like I mentioned earlier, when Luna depegged, or when USD depegged, the system got wrecked because everyone shorted Luna, right? And now they're changing their tokenomics model where, because they had the similar model where, if the vault gets under collateralized, then they're going to mint more GNS to, supply it. But that creates a negative feedback loop, as we saw in Luna, and they are shifting the tokenomic model where they're no longer going to mint GNS in perpetuity to refund the Dai Vault. And if the over collateralization ratio gets at least 130, then anything in excess of that is going to be used to buy back GNS and burn it, right? So it could be deflationary. And I mean, they also mentioned that after the whole Luna incident, they're going to do better fundamental analysis on the tokens that they list. And the problem with GNS and the risk that Gains has is that it lists all these tail assets, right? Like I don't know, synthetics, like Wi-Fi, those altcoins. So they're going to be more susceptible to, I guess, price manipulation on central exchanges. The thing is, price manipulation on centralized exchanges is technically illegal. So people shouldn't be doing it, given that these people are doxxed. But we saw some minor price manipulation in the price of AVAX, which drained some money from GOP. So it's still a risk, right? And I'm sure it could be an attack vector. So even though the metrics look strong for GNS, there are risks, right? And that's why it has a lower market cap. And the Dai Vault is 108 roughly right now. So it's not like GNS isn't going to be deflationary by any means, but the fundamentals look pretty strong. And they also introduced GNS staking, where you can stake GNS and roughly 33% of the fees go towards GNS stakers. So it looks like they're mimicking the GMX model, right? Because if you stake GMX, you earn 30% of the protocol fees. So GNS only becomes deflationary when the collateralization ratio hits 130. It's not even close, so it's not going to be deflationary anytime soon, but it should get there slowly. And one thing I want to talk about with the Gains network, right, as you see the volume here, if you go here, we see that the majority of the volume in the past 7 days is Forex. So I feel like Gains is a bet on Forex volatility, right? And we've seen a bunch of Forex volatility, right? The Japanese yen getting wrecked, the British pound getting wrecked, euro getting wrecked. I mean, anything relative to the dollar getting wrecked, right? So top coins, I guess, traded. Number 1, British pound. Number 2, Ether. Number 3, New Zealand dollar. Number 4, euro. Number 5, the Swiss franc. Aussie dollar. I mean, look at this, right? I mean, people aren't even trading crypto, right? I mean, what the hell? Who the hell is trading? What is this? Nvidia. Okay, I guess they also have. Basically, no one's trading ADA, right? Who the hell is trading ADA? So could be a bet on, I guess, Forex volatility. Could be interesting. Let's talk about FXS. I also made a video on this in July. Yeah, I spent over an hour on this. I don't even know how long this video is going to be, but it might be longer than this one. But I'm not going to spend too much time on this, because just watch this damn video if you're interested. I'm going to cover a few things that I didn't cover in this video. So maybe that's interesting. But there's been regulatory FUD, right? Especially with Luna USD imploding. That's going to create uncertainty with the regulators, right? With stablecoins. But I also argue that I feel like this was already priced into FXS when Luna collapsed in the first place, right? I mean, I feel like people just capitulated FXS at $4 or whatever, saying that, oh my god, FXS is dead. The regulators will never allow this. I'm gonna capitulate my FXS at $4 because stablecoin regulation, right? And recently, when this FUD dropped, I think FXS went to $7-ish and then dropped to $4.20 or whatever, and then now it's retraced its entire stablecoin FUD, and now it's trading above $6. Because I feel like it's already priced in, right? I mean, this FUD is already priced in, and I guess people all capitulated in addition to that. But I feel like it's building at a pretty strong floor in terms of price, because if you're buying FXS, then you have to be longer term oriented, right? No one's buying FXS to sell in 2 weeks. I mean, I'm sure people are, but I'm not doing that, right? I bought this in July, and I've staked it on Convex, whatever. I don't care, right? It's up whatever since I bought it. Earning CRV, CVX, FXS. It's cool, right? I'll check it in 2023, right? And see what I want to do with it. So since I made the video, they stripped this product called Fraxlend, which is a money market where anyone can deposit collateral and borrow Frax against it. So it's not that, I guess, innovative in that sense, right? It's just a money market, right? I mean, it just looks like this. But I guess the main differentiator for Fraxlend is that Sam from Frax mentioned that there's overwhelming demand by DAOs to use Fraxlend. I mean, there's been no DAOs that's used Fraxlend yet, so I don't know what that means. And the value proposition for these DAOs is that Fraxlend will allow these teams to create custom term sheets. And what I mean by that is, if you're like borrowing assets like on Aave, right? It's like a variable rate, right? And the rate fluctuates day by day depending on the amount of lenders and the amount of borrowers. And maybe DAOs don't like that. But what DAOs can do with Frax is that because Frax is the stablecoin issuer, they can say, hey, if you're Lido, instead of dumping your Lido tokens and dumping your Ether, maybe you can use your assets as collateral and we'll let you borrow Frax at a fixed rate of 1.5% or whatever, right? Custom term sheets. And that could be more attractive from a DAO perspective, from an institutional perspective, because you can actually, I mean, it's not really decentralized, but you can like essentially set your own borrow rate. And what that could do is, if you create more Frax debt in the system, maybe that, because with the whole Dixie thing, right, in the dollar milkshake theory, the dollar is going up because, part of the reason the dollar is going up is because a lot of foreign debt is denominated in dollars, and there's a lot of demand for dollars right now. So what if there's a lot of DAO and institutional denominated debt denominated in Frax, right? Frax milkshake theory, probably not, right? Hopium, definitely wrong on that. Frax milkshake theory, definitely not a thing, right? I put like a 2.5% probability of that happening, but who knows? That could be interesting. Also, there's this liquid staking derivative called frxETH, where you can stake your you can stake your Ether with Frax, and you can. I mean, it's like staked ETH, right? And the value prop here is that Lido, if you stake your Ether with Lido, they take a 10% fee on those validator rewards. But with Frax, like their main business model isn't this liquid staking derivative, so maybe they can offer maybe 5% fees. So it could be more attractive if you trust the protocol to stake your ETH with Frax instead of things like Lido, Rocket Pool, because they charge less in fees. And given the amount of influence Frax has with Convex and the Curve Wars, I can definitely see them Frax building like a base pool for staked frxETH. And if you don't understand that, then watch my Frax video, right? I'm not going to spend too much time on this. And there's also been a lot of drama around staked ETH and like OFAC sanctions, right? And I'm not sure what Sam's going to do, but maybe there's going to be a better way to decentralize and have less censorship resistance, or more censorship resistance with staked frxETH. I have no idea. They haven't shipped it yet, but they mentioned that they're going to ship it soon, right? They keep saying soon, so I have no idea what this means. And Ouroboros Capital has a good thread on Frax, and I took these screenshots from his thread just to give credits. And FRAXBP is at $820 million locked, and 3POOL is at $837 million, right? So FRAXBP is about to flip 3POOL. I mean, it kind of flipped it already in the past, but now it's like kind of competing. And if FRAXBP can be the number one base pool on all of Curve, and if Curve maintains their competitive advantages, for place to people to trade stablecoins, I feel like this is something that's good to see, right? And FRAXBP pool, on the left hand side here, you see the TVL for FRAXBP going up, or I guess going sideways, not going down, and then 3POOL on the right hand side here going down. So maybe if people want less reliance on Dai and Tether, maybe FRAXBP is a place for people to park their stablecoins and earn decent yield. And this is screenshots leaked by some fellow named Curvy on Twitter, chatting with Michael Igorov, who's the founder of Curve. And crvUSD, right? This Curve stablecoin has been rumored for the longest time. And basically, they're saying that it's going to come soon. And you'll be able to borrow crvUSD very close to 100% LTV. They can charge a 2% fee to borrow without risk of liquidation. I mean, I have no idea what this is going to be, but basically, Curve, Frax, convex, I feel like, that part of the flywheel, they're like this positive sum flywheel where if one token benefits, or if one token goes up, then everything else benefits, right? Because they're all interconnected. So anything that's bullish for curve is bullish for Frax. Anything that's bullish for Frax, bullish convex. Anything that's bullish convex, bullish curve, right? That's kind of how you view it. And it's something to monitor. Lastly, touching on the flywheel, there's this new protocol called Conic Finance. I don't own any, right? But they're trying to be a new part of flywheel. I'm not sure if they're going to make it, but they're trying to create these things called omni pools where you can deposit USDC on the Conic and they will automatically deploy USDC, ETH, whatever, into the highest yielding pool on convex, right? So it's kind of like this auto rebalancer built on top of convex, essentially. Their website's kind of cute. And they're probably going to accumulate more CRV, CVX, to be honest, right? It kind of makes sense. And maybe they're going to bribe CVX holders. So maybe, the bribe market can go from like 6 cents per round to 7.5 cents per round. Yeah. The token is like holding up pretty well, which is kind of surprising. And it was funny because 1 million tokens were airdropped to VL CVX holders and only 36% were claimed. So 64% of people, or 64% were sent back to the treasury. So I guess it's a true bear market where people locked their CVX and they're just like, they left the markets and they left free money on the table, right? Like people that claimed it got like 1 ETH for free if they dumped it. But such is life. So 6.4% of the supply goes to the treasury now. Market cap is that. Current price is a little bit lower. So check CoinGecko, right? FDV 40 million, whatever. And if they're part of flywheel, then maybe it has some upside. Token supply is 10 million. 10% of the CVX holders, right? Only 36% were claimed. Community raise went to 30%, 44% for liquidity mining. Treasury, I guess 12%, right? After all the people didn't claim. So it's a pretty fair distribution. I guess the downside is that the community raise, they sold 30% of the supply for 400K. So that's like really cheap, right? And these tokens don't have a vesting schedule. So I'm not sure who these people are. I'm not sure what they're planning to do with it. So that could be an overhang, right? And also the product isn't out yet. But the curve and convex devs, some of them are on the multi-sig, so it could be part of it. It could be promising. Just continue to keep an eye on it. I don't know any, obviously. So lastly, let's talk about Sudoswap. So ever since I made a video, they released the SUDO distribution. And if you do the math, depending on whatever the price of XMON is, this is the circulating market cap of SUDO and the FDV of Sudoswap, right? And I'm bullish this protocol longer term. I think NFT AMMs make sense. I just feel like I've been buying NFTs on various ecosystems, and these things are so illiquid, right? And it's just natural to assume that NFTs will also be traded on an AMM. I think 101s can be traded on central limit order books like OpenSea, right? I feel like 101s and those collector items should be on OpenSea, right? With 5%, 10% royalties. But these 10K PFP projects, just put it on an AMM, right? It's just more liquid, trades better, and it kind of aligns the incentive between the team and the community, in my opinion. But as a biased stakeholder, they also introduced new pools with ERC20s. So in the past, you can only pair NFTs with Ether, but now you can pair your NFT with other ERC20s, right? So for whatever this Bong Bear thing is, right? I don't know, they're pairing it with Ohm. And on the right-hand side, right, these other side, the other deed lands, right? They're paired with the Ape token. And I'm sure that in the future, if I ever become this NFT aficionado, maybe I'll own a bunch of NFTs and I'll pair with USDC, and that way I get paid yield in USDC, and that can be a better way to price NFTs, right? You don't have to price NFTs in ETH, right? You can price it in USDC, for example. And anyone that's been providing liquidity on SUDO, they're making bank. So that's something good to see. And Collection XYZ, they recently raised $5 million by Defiance Capital, and they're essentially building infrastructure for that allows teams to better incentivize LPs on SUDO. So if you're an NFT project and you want better liquidity for your NFT collection, you can say, hey, we're gonna give out $100,000 worth of Ether for anyone that provides liquidity on Sudoswap and stakes their LB tokens on collection.xyz, right? They're basically this liquidity mining tool. So, the infrastructure is being built. I think that's where the trend is going. And I just want to do this little quick wallet tracking that I think was interesting. So let's see here. So interestingly, I found this wallet, right? And let's look at the history here. Well, how long is this video? Okay, it's an hour. Okay, so that's fine. So let's kind of scroll down. So obviously this wallet, no one knows who this is, but they've kind of been like TWAPing right into XMON for the longest time, right? I mean, I'm not going to spend too much time on it, but you can kind of see it here. You can kind of see the trend where every few minutes they convert USDC Ether into XMON, etc. And I was like doing research on like who the hell is this person? On Nansen, this wallet was tagged as Amber OTC, but generally Amber doesn't they don't own these tokens. They generally just like market make and charge fees and whatnot. Let me get to the bottom. Yeah, so there you go. So this wallet got funded, I believe, 130K in USDC from this wallet, and it like bought a bunch of Synapse, right? And it TWAP into Synapse, and then it sent all the Synapse into this wallet, right? Into this wallet. So let's actually figure out who this wallet is. So let's go here, this wallet, and let's check the history of this wallet. And what was it? October 4th, I believe. Yeah, so it received a bunch of Synapse, and then it sent it to another address, this address, right? So as you can see, like big players, like they don't want people to track their wallets, so they're gonna try to just do whatever they can to try to hide their tracks. And let's see, let's kind of go here. What is October 4th? Let's find October. Actually, let's filter by the Synapse token. It's a lot easier. What am I doing? Synapse token. Yeah, so it received Synapse and then sent it to. Wait, this is, yeah, sorry, it's this one. Received this and sent it to this address. Okay, so let's go to this address. I mean, I guess another entity was buying a Synapse too. What the hell? Hold up. This is a real wallet. There you go. Okay, so we saw this wallet, and this thing has, $83 million, and they have a bunch of these assets, right? They have Curve, Graph, Lido, Chainlink, Synapse, Uni, ETH, and a bunch of USDC. So you can argue that, hey, this is probably an institution, right? And as you just saw from my wallet tracking, this wallet that's been, TWAPing into XMON, basically, is tied to this institution. And interestingly, I actually know this wallet. I like track some wallets, and as you can see, I tagged this wallet on August 23rd as Parify potentially. I'm not quite sure, right? But I'm pretty sure it's some fund. I'm not sure if it's Parify. That's why I have the question marks. But 2 months ago, I tagged it as Parify, and now this Parify wallet is related to this wallet that's been TWAPing to XMON. So okay, that's pretty interesting, right? And you can see, it's just time weighted average price. Buying TWAP, and as soon as I started sharing this, literally they sent it to this wallet. I mean, they sent 900K into an exchange. So I was like, oh my god, they have 900K left. Are they gonna buy my bags? But maybe when I found out, I don't know, people found out that I found out or something, and they're trying to cover their tracks. So this doesn't mean that they've stopped buying. It could mean that they've stopped buying. I mean, I have no idea, right? I mean, these are anonymous wallets, and they hold a bunch of XMON. But I would interpret this wallet related to an OTC desk or an Amber that helps institutions average into new positions, right? We saw this wallet TWAP into Synapse, and now they're TWAPing into XMON. And maybe it's not Parify, maybe it's some other fund. And I was studying this trend, and what I saw was that they were buying $800 every 15 minutes if the price was under 25K. And whenever someone sells a big chunk of XMON, they buy in bigger chunks, right? So I think there was a $50,000 sell order on 5:11 p.m. and then immediately following it, this thing bought 5K. So it's probably a bot that has like a set amount of rules. And this bot, I mean, it did not do a good job covering its tracks because, I mean, it kept buying in the same amounts. So maybe they're going to relocate this funds into a new wallet, and they're going to buy I don't know, XMON or other tokens in a less predictable manner. But one of my bull case for XMON is that I think this is an asset that I think institutions will love to gain exposure to. And it seems like that's happening. So, you know, like I said, biased bag holder, but definitely interesting to see. Let's talk about Algorand. Algorand TVL going up only, maybe not up only. I mean, the majority of these is stablecoin, so it's, I mean, yeah, TVL going up in like not that crazy bullish, but I mean, you know, it's going up, right? It's going up. FIFA Plus, the World Cup is happening next month, and you know they're going to release these NFTs, and who knows, maybe if the World Cup is like the best World Cup in the history of mankind, then maybe these NFTs will have value, and maybe, you know, Algorand can, you know, benefit from that. I also saw that the Ballon d'Or is also being like turned into an NFT on Tezos. So I feel like the FIFA or like the soccer community, the soccer organizations, they're trying to get into NFTs. So like, right, so like maybe that's a positive tailwind for I guess these NFTs. I also mentioned that, hey, I've been putting a bunch of money into AlgoFi for like the majority of the year because I expect all these protocols to have airdrops. And it was just announced on the 17th that you can claim this token called BANK, and you can participate in governance. This is going to be a money market token. I mean, they have a DEX, but you know, I don't think this token is going to do that well. So you know, congratulations to anyone that got a bunch. I think like the longer you've had it deposited, the more tokens you received. So I actually got a bunch, but it's probably not going to be worth that much. So it's like whatever. I'm not really sure what I'm going to do with it. Because I have no idea how to read the Algorand ecosystem. Who knows? But you know, you can vote on governance, and I mean, the point is, like, I'm not like trying to promote this coin because I have no idea. But the thing is, I'm promoting the farm because maybe promoting is not a good word. I'm sharing this good farm because you can vote on where the bank emissions go towards, and as you can see, the majority of the emissions are going to go towards, I guess, stablecoin yields, right? And right now, the stablecoin yields are already pretty good, right? You can stake USDC, earn 7%, stake Tether, earn 11%, and you know there can be more bank emissions, which could be interesting if you care to bridge over. I also have funds in Forex Finance, PactFi, and TinyMan. Smart contract risk is there, so you know, don't spend too much money on there if you care. But you know, similarly, I've had my funds there in case they do a token. I don't really expect these tokens to do well, but hey, it's free money. I love to receive all these governance responsibilities, right? I love having all these responsibilities just so I can dump them at a later point, maybe dump them at a later point. And I'm very, very grateful that the SEC did not protect me from these airdrops. I was a little worried, right? I was kind of scared of receiving these airdrops because, you know, the SEC wants to protect US investors from free money. But unfortunately, Mr. Gary Gensler did not protect me from free money. But anyways, let's keep going. Forex Finance here, right? I mean, these rates are less good than they were because they got diluted, but I mean, you know, not bad, right? Not bad. And I was saying, hey, Forex Finance, like, when are you going to airdrop me some responsibilities? And I'm like the responsibility to govern the future of protocol in a decentralized manner. And they're like, V2 first, then we'll get to that. So they're going to have a token. I don't know when, but you know, maybe I'll get rugged by then. Maybe not rugged, but exploited. Who knows? Some cool farms I want to share, right? Since we're on the topic of farms, LDO is emitting 300k LDO per month for layer 2s to increase adoption for their staked Ether derivative. And some of these screenshots are a little outdated because I made this like a week ago. I think it's a little, yeah. So this is on Beethoven on Optimism. You can stake, the LDO shuffle is you pair your ETH with staked Ether and earn some APR, might be lower. And this is the yellow submarine is like Trade Crypto, 33% stablecoins, 33% Bitcoin, 33% staked Ether, and it was 35%, but it's probably lower by then. Velodrome has this, it's probably lower. Okay, all these, it's probably lower by now. But you know, you can actually farm LDO by staking Ether, basically. On Kyber Network, on the left-hand side here, I think it's Optimism, right-hand side, Arbitrum. I know for a fact it's a lot lower, but there's that. On Balancer, I think the APR is 9%. These are getting diluted over time, so it's a thing. But I think Lido is an interesting token because they're obviously the monopoly in the liquid staking derivative space. And after Beacon Chain withdrawals are live on Ether, they're gonna have they won't be able they don't have to emit Lido, right, to incentivize liquidity, because you can actually redeem your staked Ether for Ether. Right now they're emitting some Lido to Curve and these LPs because they want more liquidity. But over time, they're going to be able to emit less tokens, which I think is going to be pretty good. And like I said, they take a 10% fee on staked ETH, right? So they're accumulating a fat chunk of ETH, and I'm sure at some point it's going to have a bunch of value. So various strategy. I mean, you can stake your Ether in here, right, if you want. That's also easy. But if you want to be less risk tolerant, you can put stable coins as collateral on Aave, borrow Ether, and enter farms, right? So you can technically farm Lido with stables. And on Optimism, there's still Optimism incentives if you want to take care of that, take advantage of that. And you maybe if you want to what I've been doing right for the past couple of months is whenever I buy something, I usually short AVAX along with it, just because I don't really expect the AVAX to outperform. So maybe you can long Ether, stake Ether, right, and then farm Lido and then short the equivalent amount of AVAX. And let's just briefly talk about that, right? I mentioned this in my video a couple weeks ago. I basically said that why do we hold stablecoins? Well, we hold stablecoins because we want to create optionality in our portfolio. We want to reduce downside risk, and we just want to we just feel uncertainty around the markets, right? That's kind of why we hold stablecoins. Well, if that's the case, if that's the reason we hold stablecoins, then what you could do is what if you buy something that you're fundamentally bullish on, right? Maybe you put 10K into some coin, and then to hedge your portfolio exposure, maybe you borrow 10K worth of AVAX and buy GLP with it, right? I mean, that's not really delta neutral. If you want to be delta neutral, you have to borrow 19K worth of AVAX. I mean, it's more an art than a science, right? You have to figure out what makes sense for you. I don't really have this magic equation to make your portfolio become this tank, right? I have no idea, right? So what I've done in the past, hey, GNS metrics good. I bought GNS. Then I'm hey, I bought GNS and I'm hey, macro scary, man. I've been listening to all these macro podcasts. So I can buy GNS and I can short AVAX. And fortunately, GNS up a lot, AVAX down. So I've actually made a profit on both the long and the short side. And obviously, the more GNS goes up, the less attractive it is. The lower AVAX goes down, the less attractive it is to short. But just generally, this concept is pretty interesting, just because it's these hedged farming long trade. I don't really know, because GLP is great because whatever AVAX I farm from GLP, I can use that to pay back my debt, and also I get to farm more GMX, right? So I'm bullish GNS, I'm bullish GMX. Let's buy GNS, let's farm GMX. But I'm scared of macro, so let's short AVAX, right? That's kind of the concept I want to share. So I think that's the end of the video. Hopefully this video was somewhat useful. I'm gonna try to make these types of content. I try doing live streams, but in a bear market, live streams aren't that fun because I spend time creating live stream content, and then I check the chat, and then everyone's shitting on me. So it's I'm not enjoying this at all. And also, I don't think I'm the personality type to be good at live streams. I'll just pre-record things. So live streams probably no more, unless it's the raging bull market where I'm gonna I don't know, dance in a gorilla suit. I'll focus more on these overview videos, I guess, state of DeFi video reports, where maybe I'll make a video every couple of weeks, depending on what's happening in the space, and it can be a one-stop shop for you to figure out, okay, what's important, what matters, what doesn't matter, and try to filter through all the noise, because yes, it's a bear market, but there's still a lot of building happening, and there's a saying bull markets make you money, bear markets make you rich. There's a bunch of people that said that in the next bear market, I'm gonna buy everything, right? But I'm sure like the majority of those people are gone, right? Because, you know, crypto's dead. Maybe it is dead, who knows? And maybe I'm just like wasting my time. But I will continue to dedicate my life towards this space, continue to share good research, hopefully, hopefully help people navigate the space. You know, I'm not like a good trader by any means. I mean, I think I'm okay, but I focus more on the fundamentals, and I don't want people to copy trade me. I don't want people to, you know, just blindly follow me, because I do not know what the hell I'm doing. I just want my tools, my videos, a tool for you to navigate the markets better. And if you want more frequent updates, you can check out the Discord. But thank you guys for watching. 75 minutes, very long video, but hopefully, you know, this 150 slide deck provides some value. So see you guys in the next video. And what are your thoughts on this beard? Yeah, I know.